everyone, today's video is about the accounting for partnership operations, showing on how to divide the profit and loss among the partners. We have so many methods in doing it and to explain it well, let us have this problem. We have 2J's partnership with two partners, namely Jules and JC, and the partners' capital balances are shown as follows. And this problem, the partnership resulted to net income of 2,100,000, and we are required to show on how the profit are distributed among the partners and the preparation of related journal entries based on the following independent assumptions. First, method is equally. Second, 60% for Jules, 40% for JC, and lastly, based on their capital ratios. Let's take up first the first method, equally the simplest one. How to do it? Simple. So, since we have two partners, therefore, net income of 2,100,000 divided by 2, that will give us 1,050,000 share of each partner. Since our result of the operation is net income, therefore, our entry would debit income summary of 2,100,000, and we will credit the capital accounts of partners Jules and JC with amount of 1,050,000 each, and that is our explanation. Now let's proceed to the next method with the ratio 60-40, or that is 6:4. How to answer that one? It's so very simple. Let's start with Jules. Since the share of Jules is 60%, therefore that is 60% multiplied to 2,100,000, and the product is 1,260,000. And for JC, that is 40% times 2,100,000, that will give us 840,000, and the total is 2,100,000. The total net income being accounted for or distributed among the partners. And our journal entry is this one. So 1,260,000 came from our computation a while ago, and same with 840,000, or you can present it like this way. Now let's proceed to the next method based on capital ratio, and that is specifically beginning capital ratio. The terms itself suggested that our reference would be the beginning capital balances of the partners. For Jules, we have 200,000, and for JC, we have 300,000, and we have to make fraction out of their capital balances. So the fraction would be for Jules, that is 2/5, and for JC, that is 3/5. How we get that 2/5? Simple one. 2 plus 3, that is 5, the denominator. So 2 from the capital balance of Jules, and 5 the sum of the total beginning capital balances of the partners. So the product is 840,000. How we get this one? 2/5 times 2,100,000. And for JC, that is 3/5 times 2,100,000. That give us 1,260,000, and the total of that two is 2,100,000. And our journal entry is this one. Or you can present it this way. Let's proceed to the next capital ratio, the ending capital ratio. In our problem, we didn't have the ending capital balance, so we have to compute this one. So that is 200 less 100 plus 300 plus 400. We have ending capital balance of 800,000 pesos. Deduction here, that means drawings on March 31 of the year. While for JC, we have 300,000 beginning capital balance, less drawings on June 30 of 200,000, plus additional investment of 500,000, that give us the ending capital balance of JC of 600,000. And like what we did in the beginning capital ratio, we have to have a fraction for the partners as the reference in computing or distributing the net income of 2,100,000. So the fraction for Jules would be 8/14. So 8 plus 6, that will give us 14. While for JC, that is 6/14. So to solve that one, This is it. So 8 over 14 times 2,100,000, that is 1,200,000. And for JC, 6 over 14 times 2,100,000, that give us 900,000. And the total is 2,100,000. And this is our entry. Now let's proceed to the next method, the simple average capital ratio. Simple average capital ratio. All we have to do is to sum the beginning capital balance and the ending capital balance divided by 2 to get the simple average capital balance of the partner. And for GC, that is 300 plus 600 divided by 2. So this is how we do it. Okay. And for their share, okay, to have the fraction, okay, that is 5 over 9.5. How we get this 9.5? That is 5 plus 4.5. And for JC, that is 4.5 over 9.5. So their respective share would be, okay, 5 over 9.5 times 2,100,000. That give us 1,105,263. And for JC, okay, that's it. And the total of the two shares is 2,100,000. And this is our entry. Okay. Now let's continue to the last method in this presentation, the weighted average capital ratio. We have 6 columns, okay? And we need to compute the average capital balance of each partner. The first column is the partner, Jules and JC. Next column is for the date that can be seen in our table here above. Okay, for Jules, we have January, March, June, and September 30. Okay, and for JC, that is January, June, and July. And next thing to do is to determine the capital balance of the partners based on the respective month or period. So for January 1, we have the beginning capital balance of 200,000. And on March 31, that is 200,000 beginning balance less the drawings, 100,000. So the balance is 100,000. And for June 30, what would it be? So how much would be the capital balance? So that is 100 plus additional investment of 300. That will give us 400,000 pesos. And lastly, on June 30 for Jules, that is 400,000 balance plus additional investment of 400. That give us 800,000 ending capital balance. And this is the same with this. Okay, and for the number of months and chains, all you have to do is to compare or to compute the number of months from January 1 to March 31. So you can use your fingers. So January, February, March, so that is 3 months. And for the next period, we have from March 31 down to June 30. So March, April, May, June, another 3 months. Okay, and the next is also 3 months. And finally, on September 30 down to December 31. So that is October, November, December, 3 months. And the total of this must be 12 months. That is the whole calendar year. And for the peso month, that is A times B. So that is 200,000 times 3. We get 600,000 and the rest will follow. And we have to sum all of this. The total of this is 4,500,000 to get the average capital balance. That is 4,500,000 divided by 12. That give us this amount, 375,000. And for JC, on January 1, the balance is 300. Okay, and the number of months and chains is from January 1 to June 30. That is 6 months, and the peso month is 1,800,000. And for June 30, the capital balance is 100. How we get 100? So that is 300 beginning capital balance less drawings on June 30. We get balance of 100,000. And the peso number of months and chains rather is from June 30 to July 31. That is only for 1 month. Okay, and the peso month is 100,000. And finally, on July 31, the capital balance would be 100 plus additional investment of 500. That will give us 600,000 pesos. And the number of months and chains is 5 months. How we get 5 months? That is from July 31 to December 31. So July, August, September, October, November, December. So 5 months. And the total of that is 12 months. And here, the total is 4,900,000 divided by 12. We get average capital of 408,333 pesos. And like what we did in the previous capital ratios, we can now have the fraction of our partners, Jule and JC. Okay, so that's it. How we get the 783? That is the sum of these two. And the respective share is this one. So 1,500,320 for Jules. How you compute that one? That is 375 divided by 783.333 times 2,100,000. And the same procedure will apply to JC. And the total is 2,100,000. And this is our entry. Up next is the division of profit with interest allowed on partners' capital and bonus. And if you want to be notified to the next video, you may like and subscribe, and thank you for watching.